What common mistakes do you see, say, restaurant or small business owners making that you're like, you kind of shake your head and say, I can't believe it. But it comes up
It
time and
happens.
time
Yeah.
again. And suddenly the light bulb goes off when you tell them and you're like, oh my God, I've been doing that for years. Eureka. It's like, thank you. It's like, do you see any common mistakes? Things that people should absolutely be doing aside from what we just talked about with the home office thing and
Mhm.
renting out your house?
Those are ones. I think an easy one is bookkeeping. A lot of restaurants don't do it throughout the year. So I get a lot of, and whether it's restaurants or not, they come to me, new clients will come to me in June and I say, okay, what are you making this year? And it's like, I don't know. And I was like, well, can't plan if I don't know. I'm actually going to give you one better because everybody says bookkeeping and obviously it's very important. But one, I think that every restaurateur and business owner, regardless, every business, I always tell them, you should hire your children to work in your business. Now, that does not mean that they're carrying around plates at 5 years old. That's not what I mean. Not anything like that. Nothing dangerous. But restaurant owners are actually in a very unique position where you can hire your, I don't know if I'd say infant, but let's say under 7-year-old kid to work in the business. Taste testers. It's a real job. You have to taste the kid's menu. That's real, right? You're not going to just make something and put it out and not taste it, right? So you can actually pay them. It's tax deductible to your business. It's tax free to them up to $13,850 this year. You can pay it to your child who will also not pay taxes on it. And then they can take that money, put a portion of it into an IRA, a Roth IRA, where it's tax free again. If you do that for 17 years up until they're 18, that will easily turn into like $4 or $5 million.
Wow, that's
And they,
huge right there.
yep.
Oh my
Oh,
gosh.
yeah. And every kid works in their parents' business in some way, shape, or
Oh
form.
yeah,
In
mine
some way,
did.
in some way. So you can do that. Now it's a real job. They're gonna have a job description, a W-2, all that stuff. You're gonna have an agreement. Money changes hands. It goes from your business to their personal account. But that's something, and then you can actually have your kids pay for their little league out of that. They could pay for groceries. So now you've just made like your kid's gonna buy, you're gonna have to buy groceries for your child, right? They're gonna go to little league, they're gonna go to camp, field trips, all that stuff. So now you have just turned little league into a tax write-off just because you took a little bit of time and said, well, they're already working for me, I can just pay them. And now you've kept
Oh,
that money in your business, in your
yeah,
family,
in your family.
instead of going to the
Exactly.
IRS. Yep.
Is there an age in different states? I mean, can kids do this at age 15, say, because that's the minimum working age with a school work permit kind of
Mm-hmm.
thing? If your kids are literally, I mean, tell
Yep.
us about that boundary
Yeah.
line.
I don't know about every single state. I'm here in Iowa, so I'll say how it works here. And I know it works in the
Hmm.
neighboring states like Nebraska,
Okay.
Minnesota,
Yep.
South Dakota, and Missouri. And I'm pretty sure most states are similar. If you're working in your parents' business, you can work basically from the time you're born because we have a farming history. So, like, like when you had kids
Wow.
in the 1800s, it was to work on the
Sure.
farm.
Right. Right.
So,
Yes.
here you can work in your parents' business
Uh-huh.
as much as you want because from the local authorities, from the unemployment and labor boards here in Iowa, and I know the neighboring states, is your kid's probably not going to sue you, and you're also probably not going to have your kid like dumpster diving or like doing something dangerous.
Sure.
So they're like,
Hmm.
as long now you can't go work for somebody else, but they can work in your business.
But this is no, this is really immediately
Oh
actionable
yeah,
advice, and it's good
oh yeah,
advice that most people have not heard before. And
no,
the
and
last
yeah,
one, wow. I mean, you got to plan ahead for your kids' futures. And
yep,
what an amazing way to do it. I mean, wow. And again, exponentially over time,
mm-hmm.
money grows. And
Oh
boy,
yeah,
by the time your kids graduating from high school, if they get a couple $1 million in the bank, I mean, whoa, that was very
oh
powerful
yeah,
information. Let's talk briefly about
yeah,
Roths versus traditional IRAs
uh-huh.
because business owners can sometimes catch themselves in cash shortages or the unexpected happens like the
Mm-hmm.
pandemic. And you might have a significant amount of money in a traditional IRA, and now suddenly you need to pull money from somewhere, and there it is, but there's a penalty attached to that unless you're
Mm-hmm.
at age 65, if I still understand the rules. But a Roth
Yeah.
IRA is completely different where you can put the money in and take it out. Like, why is there such a difference between a Roth and a traditional? What are those differences, and why
Mm-hmm.
is there no penalty or little penalty for taking money out of a
Yep.
Roth versus a traditional? Could you give us a sort of a
Yep.
crash course in IRAs?
Yeah. Yeah. The kind of 50,000 foot overview. So
Yeah,
traditional
thanks.
IRA, when you put that money away, so if I put 6,500 in a traditional account right now, I get to take $6,500 off of my taxes this year. When I take the money out, then I pay the taxes. So that's why you're saying, so you feel like you're getting punched. It is because you're paying the regular tax rate, which is like, 20% for most people. And then on top of that, you're getting another 10% early withdrawal penalty. For a Roth IRA, I can put the same amount in, 6,500. If I take that money out, I don't pay the income tax. I've already paid it. I would pay the 10%. So that's why it doesn't feel like nearly as much. Those are kind of the easy ways. I actually, depending on the age and the lifestyle of my client, I actually don't recommend IRAs to most clients. I actually don't do that. Like you said, I don't like tying that money up. And it's just like, oh crap. Like you said, what if something happens? And it's like, shit, I gotta wait another, or shoot, I gotta wait another 20 years, you know? So I actually like to have clients diversify in what they do. Now, I'm not a financial advisor by any means, but I work with a lot of them and they kind of help my clients navigate what they should be doing with their savings.
Let's talk quickly about the employer retention tax credit because there's been
Mm-hmm.
so much hype about that. And so many
Yeah.
owners it's been like a Hail Mary for our industry for so
Oh
long.
yeah.
But I heard a statistic the other day that like 80% of businesses out there, whether the restaurants or small businesses, still haven't taken advantage of it yet. This program has been going on now for about a year and a half. Do you come
Mm-hmm.
across that much? Do you see that the people you work with have taken advantage of it, or there's still people that don't know what it is?
I would say it's about half and half. I would say most people know what it is. I would say about half the people have taken advantage of it. Half the people have been told they can't. Now I'm going to stick specifically to restaurants.
Yes,
Why
please.
most of them qualify is when it came out. Yeah, about 2 or 3 years ago, or no, during the pandemic when it came
Mhm.
out, there were basically two criteria. If you had a loss of revenue, which most people did,
Of
then you
course.
qualified. There's
Yep.
different markers, but long story short, if you made less money over compared to 2019, or if you had a shutdown, like if your business was shut down by government ordinance, which most restaurants or not even shut down, just changed, which all restaurants were changed, right? You had to go to all takeout, maybe all outdoors if you're in California, shut down. So most restaurants just inherently qualify. Like it's very hard to not qualify unless you open at the end of 21. But as long as you kept your staff on payroll between April of 2020 and September of 2021, you do qualify. And like you said, there's some pretty big numbers. Like I just had a client, they got approved, I think, for like 80 or $90,000. And they were like so happy. And they were like, oh my God, thank you for recommending us to do this. Cause like our last accountant told us that we didn't qualify. And I was like, no, pretty sure you do. At another restaurant client, they just got approved, I think, for like 55,000. So it depends on like how many people you have on staff, how long you kept them. So there's all
Of
kinds of
course.
qualifications. But I would say if you're a restaurant owner and you're listening to this and you have not applied for it, definitely try. Like just ask your accountant, they'll tell you. And if not, you can always ask me. We have a landing page, something special for all of our guests, all of our listeners on this episode, and we'll throw it out at the end. But make sure you sign up for that, and then you can get in touch with us if you've been told no. And we do want to start applying for it because I think after basically December 31st of 2023, you lose out on half the credit for 2020, and then next year it sunsets. So we want to be doing this like now, and it does
Thank you
take
for
about
saying
5 to 6 months to get back. So
Yep.
guys, if you're listening out there and if you haven't applied, please do it ASAP because like Roger said, it's free money. It's a lifeline. Now you do have to amend some taxes from the years back. You might owe a little bit of taxes, but for the most part, it's free money. If you're gonna get back $80,000 after paying a little bit of back tax, you're gonna walk away with like probably 85% of that. And who couldn't use 85% of $90,000? I think we all
Exactly.
could.
Exactly. It was a lifeline yeah, just
Oh yeah.
before the pandemic, I bought another restaurant, not
Oh,
knowing what was
perfect.
coming. And I've been through
Well,
all that sort of thing. And it
yep.
was definitely a Hail Mary for our business for sure. And we got a significant amount of money back. So yes, thank you for your advice. And if you haven't
Yeah.
done so, now's the time before things change
Mhm.
really quickly. So that's great.
If you want even more tax tips, make sure to sign up for our email list. Link in the description. You're going to get cheat sheets, all that. And then by the end of it, you're going to say, I'm switching to these guys and I'm getting rid of my CPA.